Remarks by U.S. President Donald Trump at the White House Rose Garden on April 2nd. U.S. President Donald Trump declared this one of the most significant days in American history as he unveiled a series of new tax policies during his speech at the White House Rose Garden on April 2nd. April 2nd will forever be remembered as the day the American industry was reborn. For decades, our country has been taken advantage of by both allies and adversaries, Trump stated. He emphasized, America can no longer continue with a policy of unilateral economic surrender. We cannot keep paying for trade deficits with Canada, Mexico, and many other nations. We used to do that. We can't do it anymore. We take care of countries all over the world. We pay for their military. We pay for everything they should be paying for. When we cut back, they get angry. But we must prioritize our own people first. Trump described this as our declaration of economic independence. He added that the U.S. would use revenue from tariffs to cut taxes and pay down the national debt. With this rationale, the White House announced a 25% tariff on imported automobiles and reciprocal tariffs on all countries. That's why starting at midnight tonight, we will impose a 25% tariff on all cars manufactured abroad, he said. Additionally, President Trump announced a minimum 10% tariff on nearly all goods imported into the U.S., with even higher tariffs for dozens of countries with the largest trade deficits with America. A group of about 60 countries will face tariffs set at half the rate they impose on the U.S. These reciprocal tariffs will take effect on April 9th. For example, Trump presented a chart showing China's 67% tariff on the U.S., prompting Washington to impose a 34% tariff on Beijing. According to Reuters, the new U.S. tariffs for some countries and regions include China, the European Union, Japan, South Korea 25%, Switzerland, the UK, Malaysia, India, Brazil 10%, Indonesia, Vietnam, Singapore, Ukraine, and Venezuela 15%. Trump noted that countries seeking exemption from the U.S. reciprocal tariff policy should adjust their trade practices, end the tariffs, remove the barriers, stop currency manipulation, and start buying billions of dollars worth of American goods, he said. He claimed the announced tariffs would generate $6 trillion in investment, marking the largest tax hike in U.S. history. However, experts explain that the tariffs would ultimately be paid by U.S. businesses and consumers by signing two executive orders, one imposing a 25% tariff on imported cars and another introducing reciprocal tariffs of 10% to 49% on all imported goods. Trump asserted he was bringing back America's wealth. Stephen Innes, an analyst at SPI Asset Management, told the BBC that this was a direct attack on Beijing's extended supply chain. Vietnam and other peripheral nations are collateral damage in the most aggressive U.S. trade policy restructuring in a generation, he added. This is not retaliation, it's strategic containment through tariff warfare. CNBC noted that the 46% reciprocal tariff on imports from Vietnam could soon raise costs for major corporations in apparel, furniture, and toy industries. Some companies might pass these increased costs to consumers through higher prices. The tariffs on Vietnam will take effect on April 9, 2025. The tariffs announced by the Trump administration will also impact giants like Apple, which has diversified its supply chain and manufacturing from China to countries, including Vietnam and India. In recent years, Vietnam has emerged as a hub for consumer electronics production, with Apple increasing its output there. According to Evercore ISI, about 20% of iPad production and 90% of Apple accessories like the Apple Watch are assembled in Vietnam. Nike is expected to take a hard hit from the U.S. tariffs on Vietnam. Deputy Minister Phung Duc Thien noted that the U.S. was Vietnam's largest agricultural, forestry, and fishery export market in 2024, with $13.8 billion intraday and a $10.8 billion surplus. The 46% tariff will directly affect Vietnamese agricultural products, despite previous trade barriers being overcome. China also faces a heavy tariff of 34%. Combined with existing 20% tariffs, the total effective tariff on Chinese goods will rise to 54%. China is Vietnam's largest trading partner, with over $161 billion in goods imported from China in 2024. In 2018, Trump's tariffs on China led some businesses to reconsider their production locations, with many relocating to Vietnam. This shift boosted Vietnam's exports to the U.S., including contributions from Chinese companies that moved production there. Vietnam is clearly being targeted for its role as a conduit helping China circumvent Earlier tariffs, said Stephen Olson, a former U.S. trade negotiator, to the BBC. While the U.S. remains Vietnam's largest export market, China is its biggest supplier, accounting for over a third of total imports. Chinese firms also contributed nearly a third of new investments in Vietnam in 2024. Pushin Dutt, a professor at INSEAD, argued that the new tariffs on Southeast Asia would pose a major obstacle for China. Besides Vietnam, Laos and Cambodia face tariffs of 48% and 49% respectively. China is facing demand issues, and under the previous Trump administration, its businesses adapted to tariffs by shifting supply chains to Southeast Asia. That door has now been slammed shut, he said. However, Trump's tariffs will also affect U.S. companies manufacturing in Southeast Asia, such as Apple, Intel, and Nike, which have large factories in Vietnam. A recent survey by the American Chamber of Commerce in Vietnam showed most U.S. manufacturers there expect to cut jobs if the tariffs are imposed. International reactions. China demanded the U.S. immediately cancel the tariffs, calling for fair dialogue and vowing retaliation. Including previous tariffs, the total U.S. levy on Chinese goods reaches 54%. Australia's Prime Minister labeled the policy utterly absurd and rejected Trump's reciprocal tariff argument. Once and if it were truly reciprocal, the tariff would be 0%, not 10%. He called it not the act of a friend. New Zealand disputed the U.S. claims, stating it does not impose a 20% tariff on American goods as alleged, with the actual rate below 10%. It refrained from retaliation to avoid fueling inflation. Chile's president warned the tariffs would disrupt trade and violate global principles. The U.S. is Chile's second-largest trading partner after China. The U.K. reaffirmed its close alliance with the U.S., but pledged to protect national interests if necessary. The business secretary said negotiations were underway to mitigate the impact of the 10% tariff. Italy called the 20% tariff on the EU a mistake that could weaken the West and benefit global rivals. The ECB urged Europe to act swiftly to adapt to a world turned upside down. Mexico and Canada were temporarily exempt from reciprocal tariffs if they met trade agreement terms, though the 25% tariff on imported cars remained. Mexico adopted a wait-and-see approach while Canada, which strongly countered Trump's tariffs in the past, reserved judgment. Trump defended the tariffs, stating he did not blame countries for protecting domestic production but that the U.S. would do the same. Expert warnings. A full-blown trade war would harm all parties. Matteo Villa of Italy's International Policy Institute noted that if Europe retaliated, it could suffer more due to its reliance on U.S. exports. The S&P fell, heading for its worst session since September. The Dow Jones plunged 1,500 points, 3.5%, while the Nasdaq Composite lost 5%. On the NYSE, declining stocks outnumbered gainers 6-1. Multinational corporations hit hard. Shares of major companies plummeted. Nike, Apple, 5 below. Dollar Tree, Gap, Nvidia, and Tesla -6%. The White House announced a baseline 10% tariff effective April 5 for all countries. With higher rates for nations imposing steep tariffs on U.S. goods, we'll charge about half of what they charge us, Trump said, framing it as a partial reciprocal measure. The policy includes non-tariff barriers and measures deemed a trade cheating, meaning many countries face higher tariffs than expected. For China, the effective rate rises to 54% when combined with existing tariffs, far exceeding market expectations of 10-20%. Market panic. Marianne Bartels of Sanctuary Wealth called this the worst-case tariff scenario, triggering a sell-off as markets had not priced in the risk. Larry Tentarelli of Blue Chip Trend Report acknowledged short-term shocks but argued the tariffs would ultimately strengthen the U.S. economy. Criticism. Business groups, trade experts, Democrats, and economists warned the tariffs would raise consumer prices and stifle growth. Matt Priest of the Footwear Distributors and Retailers of America called it a disaster for American families. The National Retail Federation said the tariffs would create more uncertainty for U.S. businesses and consumers, noting that importers, not foreign suppliers, bear the cost. The National Association of Manufacturers expressed concerns about threats to jobs and competitiveness. The National Restaurant Association feared higher food and packaging costs. The Cato Institute dismissed Trump's rationale as a flimsy, and contradictory, warning of inflation and economic stagnation. Senator Ron Wyden Dior criticized the plan as a tax on everything families buy to fund tax cuts for billionaires. Economists revised growth forecasts downward, with Piper Sandler's Nancy Lazar predicting a 1% Q2 slowdown due to price spikes. Ing's James Knightley warned of reduced purchasing power and corporate profits. Exeter called the policy a massive shift, reshaping supply chains, prices, and geopolitics. Support from some business groups. Pro-tariff advocates praised the move. Nick Iacovella of the Coalition for a Prosperous America hailed it as one of the greatest trade and economic policy action in U.S. history, promising reindustrialization and jobs. Kevin Dempsey of the American Iron and Steel Institute thanked Trump for standing up for American workers. John Williams of the Southern Shrimp Alliance cited relief for domestic industries. House Ways and Means Chair Jason Smith endorsed the tariffs as a tool to curb trade abuses, calling them a level playing field for U.S. workers.
Remember to like and subscribe to my channel. Thank you very much.